Thanks for joining us today. The International Association of Certified Practicing Engineers welcomes you to this webinar. We founded the International Association of Practicing Engineers. In 2014, we founded the International Association of Practicing Engineers. We're now in our ninth year with 2,000 plus members. We provide globally renowned training modules. We provide a certification. We provide study questions, tests for each guideline. And there's already a large group of industry leaders who recognize the value of this certificate. And you'll be granted opportunities in the future from IACP certification. April 2015, this is April. We're now in our 8th year of readership. And the readership is greater than 30,000 readers per issue. And Kathy, our speaker today, has graciously written articles for Engineering Practice magazine. Today, we're discussing how U.S. propylene is priced. Our guest today is Kathy Hall. Kathy is the founder of Petrochem Wire, a daily news and pricing service dedicated to U.S. olefins and polymer markets that began in 2007. PCW is now part of Opus by Dow Jones. Opus. PCW's U.S. ethylene and propylene assessments serve as benchmarks for futures contracts that trade on the Chicago Mercantile Exchange and the International Exchange, and are widely used by the petrochemical and plastics industry as a reference in supply contracts and spot market transactions. Opus PCW has also been accessing recycled plastics since 2010 when it launched its Recycled Plastics Weekly Report. Kathy's been assessing commodity markets for more than 25 years. There are few types of financial journalism more demanding than that of a price reporter. And Kathy is a recognized expert in this field. Today, we want to welcome Kathy.
Thank you very much. And I assume you can hear me all right.
Yes.
Yeah, thank you. Yeah, so I'm Kathy Hall, and as Carl said, I am a founder of a newsletter that focuses on the value or the price of what I consider to be some of the most important chemical commodities in the world. And of these, I really view them as two different supply chains, one being ethylene, polyethylene, the other being propylene, polypropylene. And today, we're going to talk about how propylene is priced. I think an important component of investment decisions, of economic decisions, and certainly manufacturing decisions, really at the heart of it, get to some very specialized areas that come from petrochemistry, that of course came from the refining industry. And as all of these markets have commoditized, starting with crude oil, natural gas, and different processes enabled petrochemicals to come to the market and then be developed further into use, as a lot of people know, especially those in the engineering and technical space, that plastics were largely developed, I suppose, in the 20s, but really getting into mass production for the Second World War effort. And so that would be, some of the best engineering and R&D in the world was going into polymer technology. And this was relying upon using these exotic products of propylene and ethylene. As these things developed as markets and finding uses and applications and all sorts of aspects to the market, a very crucial part of this is what's the price? Because if it doesn't work on a business level, what do you really have? So with that, I'd like to move along to the next slide. Thank you. And talk to you all about, obviously I don't need to explain the chemistry of how it's done, and that's not my area of expertise, but most people are familiar with propane. I've got a picture of a propane tank. A lot of us have them in our backyards or homes, or are familiar with propane as a fuel use. If you're in other parts of the world, you're also familiar with it as a transportation fuel, but propane is a pretty widespread product that can be made from the refining process or the natural gas process when you can fractionate into the raw mix or Y grade of the natural gas liquids and further refine that and fractionate it into propane. So when you have the propane, you have a number of options, and a very popular option among them is to ultimately make plastics. Now, the picture I have there is plastic bottles, but polypropylene is one of the most durable and useful plastics that's ever been discovered. That you might find other plastics, not to demean them, but a flexible, like a adhesive tape or something, it's not very strong, and that sort of plastic isn't appropriate for use in something where safety and performance is crucial to the situation, such as automobile production or parts of uh, airplanes, things like that, medical equipment. Polypropylene is often the resin of choice. How do you get from propane or the refining stream into the plastic stream? It is that question mark in the middle, propylene. And that's really what I began focusing on, or became fascinated with a few decades ago, is realizing that in the United States, at least, there are, in my opinion, a handful of propylene production sites, maybe about 50 in total, run by possibly 20 or so companies, and that most of this production is localized in Texas and Louisiana. This is compared to, let's say, the refining asset situation in North America or the United States, in which there are hundreds, more than 500 refineries. And yet propylene itself is as important to the heads of many companies. They know the price of crude oil, natural gas, ethylene, and propylene. So this propylene is really a very important component, and its value sets itself. And that's what I have. I consider myself to be fortunate to have witnessed. This market came from being a function of other products to commoditizing itself. So at times, crude oil or natural gas could be doing one thing, propylene was ignoring it. How can that be? Because propylene was developing its own dynamics, and the plastics markets were developing their own dynamics. So let's move to the next slide and I'll explain more about this. So propylene is actually, there are three types of propylene. I say that among chemicals with the one name propylene, it's highly nuanced because you really do need to specify what kind of propylene, and that speaks to the purity and also the composition of the product itself. Refinery grade propylene is, as it sounds, typically found coming from a refinery. It's produced as a byproduct of propane production, so that when you're buying and selling this type of propylene, it's coming along with propane. It is liquid, physically liquid, and its content to be considered useful is 65% purity for propylene. There are, of course, there's lower content, and that would be considered off spec and not nearly as attractive or useful, because the main uses of the refinery grade propylene ultimately are for these very demanding grades, chemical grade and polymer grade. And the chemical grade, as it says on this slide, you can upgrade your RGP, the refinery grade propylene, into a gas. And that gas can either be 94% purity, that would be your chemical grade, and that has a host of uses. But the highest grade of all, what I call the champagne grade, is the polymer grade propylene, and that is used exclusively to make resin plastics, and it requires a purity of 99%. On the next slide, we'll get into more of this. How it's made, the refinery grade propylene is usually produced at the refinery, and it's a raw form. The chemical grade and the polymer grades are collectively called finished grades. They have been upgraded. They have to be upgraded in some way from another product, such as refinery grade propylene. On the next slide, we'll talk about other ways to make this, that you can also make what I'm going to call PGP. That's the shorthand. PGP is polymer grade propylene. PGP is produced as a byproduct, or you can make it as on-purpose propylene. When you're making it as a byproduct, then it is produced at the steam cracker. So the steam cracker, if you're not familiar with that term, it's an olefins plant, and it takes in raw liquids such as ethane, propane, butane, naphtha. It's taking in these liquid raw materials, it's turning them into steam, it's introducing catalysts, it's literally cracking the molecules in steam, which is why it's called a steam cracker, and it's creating ethylene as the on-purpose product. Ethylene, we'll have a whole nother webinar about that, but you can make hundreds of other chemicals from ethylene, but you're also making a pretty decent amount of propylene. So while the ethylene is the on-purpose product, everyone who's investing and operating a steam cracker understands that propylene and other products are part of the mix, and propylene is a very attractive byproduct. So depending on what you're feeding into that steam cracker, because you do have an option of ethane, propane, butane, naphtha, that will give you a different yield. So ethane is a very light feedstock, and that will give you almost all ethylene, very little of anything else. When you get into propane, it's slightly heavier. That's why in the hydrocarbon nomenclature, these NGLs, the natural gas liquids, are known as C2 as ethane, C3 is propane, C4 is butane, and so on. So the heavier you get in that chain, the more byproduct you make, the less on-purpose product of the ethylene, because it's very light and pure. If you're familiar with refining technology, it's like the jet kerosene part. It's the lightest, purest thing you can make is the ethylene. So as you're cracking heavier or dirtier stuff like gas oil, you will make a significant amount of propylene and other products and not nearly as much ethylene. So depending on the economics of the moment, if ethylene prices are not that great and propylene prices are really great, if you're operating that plant, you might want to maximize your byproducts there, such as propylene. The next slide will get into more ways that well, that's what I was just saying here on this slide. So if the PGP price is very high, which it tends to be, and the ethylene prices are low, and especially if they're falling, the steam cracker would see if it makes sense to switch that feedstock, especially, you can't make this stuff happen instantly, but if this is going to be a sustained trend and you have that capability at your unit, you'll make that choice. Next slide, we'll get into more methods. Splitters. Splitters are they're a way to make on-purpose PGP and also chem grade. But PGP is the most desirable grade, and obviously at 99% purity, you can use it as chemical grade. If you have a 94% purity requirement, you'd take 99% all day long. So the goal of most splitters is to make PGP. So once you receive, if you operate a splitter, like for example, it's no industry secret that Enterprise Products, they own a lot of splitters at Mont Bellevue. So when they receive refinery grade propylene, it is to feed it into a splitter and create upgraded propylene with the highest purity possible, which is the PGP polymer grade propylene. Now, the splitters they're not necessarily new technology. They've been around for many decades and is a really efficient way when you have this at the refinery, when you're shipping out this combination propane with the propylene. You might have a use for the propane. What do you do with this other stuff? Well, we'll just upgrade it over here at the splitter. So that's again where the first on purpose production really evolved from. And splitters are not, I don't mean to say that they're not complicated units, but as a production unit, they're far less involved than a steam cracker or a refinery. So it's relatively easy if the market is not going your way and you have the option to turn down a splitter or turn off a splitter. It's not quite the massive decision or process that it would be to shut a chemical complex. RGP, the refinery grade propylene, as I say, most of it is sent to the splitters. However, there are other uses. Cumene is a product that originally, I believe, was designed to be an aviation fuel additive. And this was, I also think, was in the same time frame as World War II. So it was quite popular as a fuel component. But then further, scientific engineering R&D had discovered that cumene is also, especially when there's no world war and we're not fueling as nearly as many planes, that you can create a whole host of products that I refer to here as the phenol supply chain, phenolic resins and acetones and acrylates and things of that nature. So there's a whole new life breathed into the cumene chain there. It is always an option for that RGP. If the PGP splitters don't want the RGP, well, there's other options too. And of course, you can, at the refinery, you can also blend, if you separate out that propylene from the propane, you can blend it with isobutane to make a gasoline blend stock that we call alkylate. So a lot of people are familiar that refineries have some real key components to them, FCCs, this and that, hydrocrackers and whatnot. An alkylate unit will usually be one of those units, and that's always an option for where to send that refinery grade propylene. So my purpose in telling you about this is that before we even get to the PGP, which is really the global price benchmark of this whole propylene chain here, that prior to getting there, we're also assigning value. Is it coming from transportation fuels and gasoline blending? Is it coming from phenolic resins? Or if you are taking it in the splitter, do you need all of it for plastics, or do some other chemicals say, I will take that and turn it into synthetic fiber, whatever the use may call for? On the next slide, we'll get more into that, because I was there, and many of you may have been there too, with the shale craze that really started ramping up around 2006, 7, in my recollection, that we went from building, facilities to import LPG. Yes. You'll pardon my office mate. Oh my goodness. Anyway, we went from a country that was building facilities to import LPG and level that cost structure for us in terms of cheap natural gas, that the shale revolution turned a lot of those plans into. Now we're exporting LPG, and by 2010, 11, 12, every single chemical company, in my recollection, was announcing expansions based on the shale. What were they expanding? They were expanding their ethylene production. So if they were building a steam cracker, it was designed to mostly take ethane. What is that doing to our propylene? There's not a lot of propylene growth during that time. So you can build more splitters, which companies did do, but there's also a technology called dehydrogenation. And that's where you can take propane and put it through a unit that will upgrade that into it will take the propane, not refinery grade propylene, the propane component, and take that into a unit that will turn it into the finished grade of propylene itself. So again, they're designed to produce the PGP with the 99% purity. But of course, if your purity is any less, you can sell it as chemical grade just as easy. These are not complex units in the same way as a steam cracker or a refinery, but they are massive and they can make billions of pounds per year. The first one that I recall was, I want to say in the 2010 era, and then it took a few years for two others to be built in Texas, and I believe there's a fourth that's either starting up now or is about to. But this is a technology that enables massive commitment to on-purpose propylene. And again, the reason for this is the topic of our talk today. Because of how propylene is priced, it's a pretty lucrative investment to make it on purpose. In the next slide, we'll get into other aspects of, let's say, I will say LyondellBasell and BASF. They are the two companies that when they were developing their steam crackers, they also constructed a metathesis unit. Metathesis operation on site at a steam cracker will allow a chemical producer to take that ethylene and transform it into propylene. So you already have a very high purity product that you're altering, again, through catalysts and processes to become another type of olefin molecule. And the benefit of that is if you're not comfortable making a feedstock change to the cracker itself, you can actually take your finished product and make those propylene molecules from that. So like I say, there's two such units in the US that I'm aware of, and they're both in Texas. Next slide, we'll get into, I've talked to you about how you make propylene, and I've touched on the demand side and why people focus on plastic. Because obviously you can make many, many things from propylene, but most people who are in the propylene market at all, even if they're not making plastic, they're watching the plastic market. Because PGP is the dominant type of the finished grade produced, its major goal is to make plastic. So in a market that has supply and demand affecting it, the demand that's affecting PGP is the demand that's affecting most of propylene. That demand is exclusively plastic. So that's where plastic plays it plays a very significant part in the value of the propylene. Again, if the plastic market is oversupplied, or if the US itself is so high priced that it's attracting plastic imports, this is all backing up into the supply chain and the values therein. So on the next slide, we'll get into some other demand, and that would be anything other than plastic. As I say, you can use chemical grade, you can use PGP as CGP, as chemical grade propylene. So the CGP, though, it doesn't require the 99% purity, but it does. I mean, 94% is pretty high quality, but it's widely used in solvent chemicals, in the acrylonitrile chain, acrylates, butanols, many other chemicals. But because this usage is pretty varied, there's no one sector that's really swinging the demand picture. You could be having a great run in butanol demand, and is that really moving the needle for the entire propylene market? Usually not. And as I say, PGP is what we mostly talk about because the chemical grade propylene itself is priced as a relative price to the PGP. PGP price sets the price of the chemical grade, where chemical grade will be priced at a discount to it because it's a lesser purity. And then in the next slide, we'll get into some other stuff. And then how are we pricing this? So we have 6 basic ways of pricing this. The spot market is the component that I have been so fortunate to have been able to watch grow up from having maybe one trade per quarter, one trade per month, to one trade a week, one trade a day. And now we have a market that trades pretty robustly in that spot market. And we'll get into that on its own slide. But, we also, when you have a spot market, you can develop more options. You can develop how to price things relative to the spot market. You can have a spot market indicator average, a weighted average, an arithmetic average. So that spot market really has helped the propylene market itself develop as a commodity with transparent value. And then on the next slide, we'll start to get into the 6 basic ways. So forever and a day, most commodities do start out with the slowest type of pricing, which is a monthly negotiated price. And this can, be akin to what you would call, an OSP in crude oil, right? The official state price, or even like, any sort of posted price that's out there for other commodities, that all of your material is based on a single price and is a negotiation between 2 people. I propose this price. I don't like that price. I'll pay this. It's a real barter. Not necessarily barter. It's a real negotiation in terms of getting that price. And this had, when there is no other indicator, that's really what you've got, is you decide its price by your conversation. So as markets in general evolved, which of course, it's unfortunate that markets as they evolve will lend themselves to stress tests and loopholes that nobody knew existed until a bad actor comes in and takes advantage of it. So that is where through the decades the commodities markets themselves have become more sensitive to compliance and to the appearance of things that might appear to be arm's length or not arm's length. And therefore the spot market really took off in a sense as an outgrowth of the monthly contract price, as certain companies grew bigger and more attached to other parties in the market, that if you are a net short, which means you produce propylene, but you don't produce enough for what you need, and you're negotiating with somebody else who also produces propylene, but they produce more than they need, so they're a net long. Yes, it is a person selling propylene to a person who needs propylene, but on some level, if you're both producing propylene, does that feel as compliant as it could? So what are some other options you have to remove that, even a scintilla of appearing to be potentially improper, which, the dirty word is price fixing. Obviously, it's not an intentional thing, but if you're both producing the same product and you're on the phone going, I think the price should be this, can that be misconstrued? And that was very, became increasingly important as this market evolved. And on the next slide, we'll talk about other options that then became available. So with the spot market is essentially what is known as the incremental volume. So the incremental volume that trades at a transparent and standardized price, location, volume, so that you don't have what could be, prices all over the place, saying, well, I did propylene at 70 cents. I did it at 40 cents. Well, you're in one place and you're in a completely different state, and your volume was very small and yours was very large. And, also the specifications are not lining up. So when we say a spot propylene deal for that polymer grade, which is the most desirable and the most volume is produced, so it's the most available, we're talking about Mont Belvieu, Texas. We're talking about it as a gas in the pipeline, and we're talking about delivery. You down there? We're talking about delivery within a certain time window. So again, the more probing questions a price reporter like myself and my colleagues would involve themselves in, it's the question you ask if somebody says, I did this deal at this price, and you say, is that to be delivered by the end of this month? They'll say, no, it's actually going to be delivered in 6 months. And I'd say, well, that's very nice, but that has nothing to do with what we're assessing today's value at then. When we go into November, we'll remember that, but thanks, and we can definitely say today's value of November is what you just told me. That's great. But, you also have to verify things. It's rare that people lie to people like me, but, there are standards that it is, as we've seen again with unfortunate bad actors, that it is, it's not legal to lie about your transactions to people like me that are publishing an index, because that's just simply, it's not fair. It's disruptive. It's somewhat sinister. So getting all of that in place, when you have, let's say, 50 deals in the course of a month, there's 20 trading days, you're getting, 1, 2, 3 deals a day. Maybe one day you don't have any deals, another day you have 6 deals. The spot market operates in terms of supply and demand. That's its own rhythm. But at the end of the month, no matter what happens on a particular trading day, there is one price according to the newsletters and according to the futures exchange. Like this was the same with crude oil, and that contract on the New York Mercantile Exchange, I believe, was launched in the early 1980s. I'm going to say 1983. I'm pretty sure that's right. But the point is, when the futures contract would settle at a particular time of day and it would post as the settled price, you had one price for oil that day. You may have had 4,000 prices through the course of the day. This thing traded here, here, here. But at the end of the day, what was the price? And that's the price. And that's the price you'll see on television. NYMEX WTI crude settled at this price. It's a single price. So we do that for propylene too. And the benefit of that is that you can have a lot of different deals happening through the month or through the day. You have one price, which means at the end of the month, you roughly have 20 prices. When you do a straight, simple average, that is a calendar average. So that is one way that a person or a company can price the propylene. Instead of negotiating, they'll say, I'll just pay the calendar average. I'll just sell you the calendar average. Or I'll do the calendar average plus a couple pennies or minus a couple pennies, whatever that is. And on the next slide, we'll get into other types of averages. So the weighted average we have throughout the month. And again, I'm not reading these slides verbatim because I'm assuming you can all read that throughout the month, we do have these trades, or throughout the day. And this is, if you're not really heavily into trading lingo, that it's what's called as having skin in the game. And that's where a weighted average finds favor with certain people in the market who are saying, I don't want just that one price a day. I actually want to factor in every single transaction. I want every transaction, and not, let's if one is the way that propylene trades is in pounds in the US, right? And the reason for that is it's a gas. So pounds doesn't really make so much sense. But when you're making plastic resin, that is a solid. The solid plastic sheets are chopped up into pellets and they're loaded onto rail cars and trucks and container ships, and those are weighed in pounds. So when you're trying to do your supply chain gymnastics, it really, why not price the propylene itself in pounds? You're only making the other thing in pounds. And that's where we have the pounds come in as the standard volume used in terms of measurement. And in a propylene spot deal, you'll have anywhere from 1 million to 10 million pounds in a typical deal. Most deals are 3 million or 5 million. So in a weighted average, somebody like myself or my colleagues, we are running around collecting deals, traders, brokers, producers, consumers, people feeding information into us. I did this deal, I did that deal, and we check it out and make sure that's true. How do we check it out? It's through relationships that we have. So when someone calls and says, I just did a propylene deal at this price for this volume, for this delivery, by the end of the month or by the end of next month or whatever that is, I don't assume the person's lying, but I say, okay, can you tell me who you sold it to? And they're like, okay, but don't tell anyone. And they know I won't tell anyone. I won't tell anyone that they sold either. What's important is the value information, the price, the timing, the volume. And they'll say, okay, I sold it to this person. And I will quietly reach out to that person and say, is it true that you did this deal? Yep, it's true. Okay, that's how information flows in the world that I live in, price reporting. So that said, again, there are parameters around. Some companies have a policy of they do not disclose any of their transactions at all. But one thing that is a standard is that it's called the all or nothing standard. You cannot choose to report your favorite deal of the month. You commit as a company, we report all the deals or we report none of the deals. And you have to trust. And, if you need an agreement with someone like me in writing, I will never disclose your name, this and that. But it's a process that the standards, the confidentiality, the trust, the relationships, it all comes into play to determine the veracity of these spot market trades. So it's almost like that part is the heavy lifting. And then once you've got a nice system, like I did with the newsletter that I had started, the information's flowing in. And sometimes, it feels a little bit like a gossip column. Somebody will call and say, I heard so and so did a deal. Okay, hold on. So and so, did you do a deal? So, but when you have that system going, I think it's terrific because it's very helpful to the people out there in the market looking for indicators of value. They don't have to go chasing around. I heard he did that and she did that. They buy our newsletter and say, well, that's what happened. And they have a lot of faith in it, which is nice. So my point in talking about all this with this slide is when you have a good system going on a price reporting basis and a futures exchange too. I mean, that is transparent. Propylene is not like natural gas or crude, which trades, hundreds of thousands of times per day. But if you get, a dozen trades, that's a lot of volume. And you also can see exactly what they were in terms of price, volume, and timing. But this gives you another option at the end of the month, going back to the negotiation process. If anybody in that process is like, I feel a little funny talking about price with you. Okay, well, do you want to do a calendar average? They're like, I want somebody with skin in the game. I want to base it on deals done, not some newsletter's opinion of where the price ended. I want deals done. Okay, let's do a weighted average. And that's where I say a PRA, which is Price Reporting Agency. That's where we come in saying, here's all the deals, here's the weighted average. The thing with weighted averages is because they are dependent upon deals. What if you're in a situation where a market just doesn't really trade after, I mean, today is, the end of the month, and let's say there are no more trades. We still have a few more days of value in this month, but there's no trades. So you might have something that is like a snapshot in time. And if that doesn't suit your needs, there is that calendar average that gives you a value every day, trade or not. Next slide, we talk about a different type of weighted average, the 45-day weighted average. So the 45-day weighted average is it's very much like the 30-day weighted average, but what this involves is the second half of the previous month. So let's say at the end of April, you can have all the trades for April delivery between April 1st and April 30th, or you can have all the trades for April delivery that began March 16th. If it traded in March for March delivery, that's nice for March. It's really in the second half of the month, people are looking ahead. So today, for example, maybe the most popular trade of the day is the May market because May is about to happen. So to exclude that for some people is not comfortable. So they want a 45-day window. Again, it's the same exact process as the 30-day average, just extended out by that 45 days. And then in the next slide, we will get into two very different ways of pricing this finished grade propylene. One is, well, they're both cost based. And now that we've been through how you produce the propylene, one way is through the refinery grade propylene pricing. I apologize for my colleagues again. They have a lot to say today. The refinery grade propylene pricing, you can put an adder onto it. So again, if you're in that monthly negotiation and you're saying, let's do a portion of it on the calendar average, a portion of it on the weighted average, and let's just do a portion on the cost. That'll make you feel good as the producer because it guarantees you a margin. It'll make me feel good because I'm not subject to the whims of supply demand in the resin market. This is all cost based. This is from the refinery right to my door. So again, how do you use that? What's the price of refinery grade propylene? It's pretty much similar to what we've got here. When you look at a 30-day or 45-day or a calendar average, you can have that for refinery grade, but it's a whole different price. Of course, it's much lower than your PGP price. And then you agree upon an adder, be it 15 cents a pound, 20 cents a pound, whatever that could be, that guarantees some sort of value on top of the raw material. That's one way of pricing this as well. And on the next slide, you will unsurprisingly see propane-based pricing. So similar to this RGP-based pricing, if you're using propane, like in your PDH unit, to make this propylene, why on earth would you use an RGP price as your cost base? You'd say, all right, well, because I'm buying so much volume from that PDH unit, let's do a propane plus. And then propane, the company that I work for, Opus, they publish propane prices that are the international benchmarks for propane. So they'll say, okay, I'll do the Opus propane price, the average of the month, whatever that might be, plus, an adder, of course, to make the producer capture some value. And also to, now you're following the propane market. You're really, again, you're removing yourself from plastics and other fundamentals and looking at the propane market, which is we'll see in some slides. It's those prices are very different and trend very different from other types of commodities. And then on the next slide, this is what I'm saying. So here we have a negotiated contract price for that propylene, the polymer grade propylene, and you will see this takes us, really the last third of this. We've got civil war occurring here. The last third of this slide, you'll see that we really got down to the depths here during the COVID. We had a little bit of a slump and then a gradual dive down to really nearly the 20 cent per pound mark, and that's fairly low. And as with a lot of products, I think when the realities around the demand situation set in, at least for myself, oh, we're going to be here for a while. Well, time to redo the kitchen or the backyard or whatever. And people began buying things again. They're made of polypropylene. So in a pretty short amount of time, we got the demand, but understanding that maybe we were too bearish. So that's where you get, the price spike. And propylene is such that with this negotiated contract price, again, when you're setting one price for the entire month, that's why you don't have a smooth line. It's up, it's down, it's up, it's down. We were just getting news this morning that the contract for April was settling at a decrease. Last month, it settled at an increase. So it's very rare for this monthly price to be flat. On the next slide, we'll see something that looks surprisingly similar, but also somewhat different, but you'll see that same trend. We had that dip in at the end of 2019 going into 2020 and and now we're back up. And that calendar average reflects the price every day as factored into the monthly average. So what's nice about that, and also about the weighted average that you'll see in the next slide, is when you're in touch with the market every day, and let's say you're reading our newsletter, Petrochem Wire by Opus, that you get to see every day what the price is. And also we do the math for you. So it's the month to date average. And if on the 10th, you're like, my God, this price is rising pretty fast, and you're a buyer, well, you can maybe make some volume decisions on what to do at that point, because you have an eye, you see things coming. So by the time you get to the 20th or the 25th of the month, you have a real good idea of what this price is going to look like, which is different than the negotiated price. The negotiated price is it doesn't, you don't get updates on it every day, because that's known as signaling the market. I'm going to raise the price 10 cents. You can't do that in this country. But what you can do is trade the market every day. And you can have a price assessor who is not, I'm not in the market. I'm like the secretary writing, here's what we think the price is every day at the same time. And then that data over time is really what proves its value. But on a trend basis, you're really doing about as well as the negotiated price. So on the next slide, you'll see a very similar trend. Oh, look, the weighted average, 45-day average, right? So these are similar trends that you see here, where you can't, again, it's not to say that all of these methods are the same. What I think is really validating about the integrity of the market is you can't get away from the truth. Any way you look at it, calendar average, a weighted average, a daily price, it's all going the same way. But, when you can get in front of your own costs on a 45-day weighted average, by day 20, you're like, I have some real good information here. And that's the value of all of this. It really, no single negotiator or buyer or seller can affect the price. That's the point of having a market that's commoditized. Now, the next two slides, when I was talking about cost base, look at that. That's a way different trend, because the RGP, remember, we're not really talking about plastics so much. We're talking about alkylation units. We're talking about cubing economics. We're also talking about the finished grade, but plastics are not as significant to this. So this has to do with refinery operating rates even. And if alkylation units are running, or if alkylate is even a popular blend stock. What's the RVP in the United States in any given season? So a lot of other things happening. So this price will appear to be less volatile than the other. However, there's there might be a tighter band of price. So on one hand, if you're a buyer, you're never going to see those highs. You're also never going to see those lows. So, again, that's your own decision on how to do that when you're the contract participant on a term contract volume. But that is certainly an option, and it's a popular one. Okay, next slide. And I think this is, yep, the non-TET propane. And that just speaks to where in Mont Belvieu the storage is, the non-TET part. And for an adder, I just threw an adder on here of 20 cents a pound, which, hopefully is generous or reasonable. But again, look at that stability. So again, there's no real significant peaks or valleys, and that might be what you're angling for. But let's say, for example, you're trying to raise the price of your own plastics. You cannot point to a PGP price if your customer knows you're really using a propane price. And they're like, why are you trying to put my price up this amount when your price didn't go up? Look at this chart. So again, everything has its own relationship and consequence, and all sorts of things that go into the decisions you can make once you choose the type of pricing mechanism. But hopefully I've explained how the propylene is priced, so you have this information on where the options come from. And again, these are things that largely have happened within the past 20 years on the spot market side. And really, with the futures contract for polymer grade propylene was only launched in 2010. So this is not a market that we've grown up with. This is a market we've seen start to grow. And again, we can get into it either after this with some Q&A or in another segment, because the US is only a part of the picture. Pretty big part, but certainly not the only part. I think the next slide is our final slide. No, it's our penultimate slide. And this is really just for everybody's reference. I took obviously I took a brief history here. These are your 6 mechanisms. So these are all very valid ways to price propylene, but they are varied. They each carry their own risk. They each carry their own reward. The next slide is the last one because I plotted them on a chart. There you go. And that's how they go. So you can see, again, the validity of all of these mechanisms is apparent in a chart like this, because you really can't get away from the truth of what's happening in these markets when you see this sort of information. So that is, I think that's all I've got in the prepared slides. And Carl, back to you, talking more about what you think the audience might want to talk about, or whatever you think is appropriate right now.
Thank you for a great presentation. I know I certainly picked up quite a bit in the presentation. It was very informative. You mentioned that producers should not discuss a common price. And what are some of the requirements for independence?
Sure. It's it's generally known as an arm's length type of deal. So an example I'm going to use, and I don't think this is talking out of school, but in 2007, I believe it was when Lyondell and Bissell merged. Now, Lyondell was a major seller of propylene. Bissell was a major buyer of propylene. So for a certain amount of time, of course, a merger of that scope and scale is not going to happen overnight. They still had supply contracts to work out. I didn't work at either place, and I don't know what the situation was, but you would imagine that at some point, are we arm's length? You know, are we setting the price of anything? Whose common good is really here? So that's a very specific example of a situation that could beg the question. If you are, again, as I had hopefully, alluded to when I was talking about negotiations that might feel a little questionable, is if you're producing the product at all, and let's say it's me and I'm producing eggs. I have a backyard of chickens, I'm making eggs, and I need more eggs. Um, am I going to talk to somebody next door and maybe we're going to set a price for the eggs, knowing that we both sell to the same farmers market? Does that feel right? What if somebody found out? Would I feel comfortable talking about it? It's that kind of situation where if you're asking the question of yourself, it's probably better to be cautious. And that's where a number of companies, they use newsletters, of course, because we have lots of rules at our operation of how are you unbiased. Well, I don't own stock in any of these companies. I do not participate in the market. Neither does anyone in my family. All this stuff. I hold insider information. So it's important that there is no benefit to having information for me. But that's why newsletters exist in the first place, because we are the phone call that somebody can't make, for example. But again, situations change, and maybe like for it doesn't necessarily have to be that you're a net short producer, or that it could be that you are a trading department within a company, that there's the company and then there's the company trading arm. Is that arm's length? Again, isn't it better to put that out there to the market and at least remove any possibility of anyone questioning if you're arm's length or not?
Very good. Very good. As countries develop, the demand for propylene products increases greatly. And you had mentioned some of the world scale. Today, we're talking about the U.S. scales. What is your view? Where do you see the price of propylene going as the countries develop?
Well, the rest of the world, it that has also changed a lot in response to the shale technology revolution. And also at Opus, where I work, one of our divisions is the chemical market analytics division, and I recommend them very much for doing those deeper dives into regional fundamentals and different world pictures of these markets, especially propylene. But what I can say is we now know, after watching me go on, we know what the situation is in the States. We have a lot of steam crackers. They're using the NGLs, the natural gas liquids. It's made from the shale. It's a very low cost operation. We're making a lot more ethylene than propylene. In Europe, the steam cracker situation in that continent, especially Northwest Europe, it's almost like there's two markets. There's the markets near the coast, and those are a lot of the ethane and NGL type steam crackers, taking the very light materials and turning it mostly into ethylene. When you get inland a little bit, in the interior of the continent, these are more refinery intense. They're usually dependent upon naphtha and gas oil and things that they're getting from the refinery on site or very close by. Now, those prices of naphtha and gas oil, they're fundamentally higher than those nice, cheap, and easy natural gas liquids. And natural gas liquids are also, they're so abundant in North America or the United States, really, that there's massive amounts being exported. So you're at a real advantage in Europe if you're in that subset who can use the NGLs. But the rest of Europe, by and large, most of Europe is using a much more expensive feedstock than the US. So the European price of propylene is typically the highest price in the world. As a result, it attracts a lot of imports of different products. They will be some of the first plants to shut down when there's an energy spike, because they become the ones that are immediately not profitable. Especially when you're propylene, it's not as though you're even able to get that high price at significant volumes because you're competing with stuff from the US, which is very cheap. As a result, there's not much investment into European petrochemical infrastructure because of how the system is priced right now and the feedstocks and all this. And then moving to Asia, you have these massive petrochemical complexes that do have a lot of flexibility for what they're using for their feedstocks. So again, like Europe, there's like a tale of two propylene markets. Are you using naphtha and gas oil? Are you using ethane and propane? But also in the interior of China, there are massive, there's a lot more than 3 PDH units. How's that? There are literally dozens of smaller sized, but some significantly sized PDH units, because that is a very sound investment for on-purpose propylene. You can import inexpensive propane from the States or other parts of the world, so or source that locally. China also has a coal to olefins, methanol to olefins. So China in particular, which is of course a huge force in world demand of anything, including chemicals, in propylene, they're more self-sustaining than in other chemicals for sure. So that's an interesting part of the recipe. But in our price charts, which I didn't include in here, but I certainly can, provide that to anyone who wants it. When you look at the global price, there's the US and Asia, particularly the China price. They're pretty close together. And then I mean, the US and China at the bottom, and then Europe's floating up on top. So there is a big discrepancy. And of course, there's lots of technology being invested in for making more propylene here and making more propylene in Asia. It is a profitable product when you have a cheap feedstock source. And it's a massive investment, of course, to make a PDH unit, but it's not as large as building an entire petrochemical complex with a steam cracker and a refinery and all that stuff. The PDH construction is something that is the investment level is attractive as well.
Thank you for a very interesting webinar. And thank you. I know I personally learned quite a bit, and it was very interesting. And
Well, Carl, thank you for saying that. I mean, when you say that you learned something from me, you're making my day. I really appreciate the opportunity not only to converse with you, but to address your constituents. And if anybody from your world or any viewer here has further questions or thinks that maybe I said something incorrect, I look forward to addressing that and following up with anybody who'd like to.
Thank you, ma'am. Thanks for your time today. Thanks for a very interesting and informative webinar.
Thanks.
We look forward to maybe some additional webinars in the future.
Yes, me too.
Yes.
Thank you.
Ma'am.